Hello and welcome to the Masters of the Street edition from ICICI Direct. Although most fund houses are process driven and are driven by many guidelines, a money manager's role cannot be undermined. At the heart of fund management is a core team of analysts and fund managers who track multiple sectors and companies on a day to day basis. And every scheme has a designated fund manager who is responsible for its long term performance. With Masters of the Street, one can get access to exclusive portfolios built by the masters of equity investments. Investors and clients can now subscribe and manage their portfolios in just a few clicks. Today, we have with us Mr. Sunil Singhania, founder of Abakkus Asset Manager. Mr. Singhania is the founder of alpha-focused asset management firm Abakkus. Sunil is a CA rank holder and a CFA charter holder too, and has a distinguished track record of over 2 decades in equity investments. Sunil, thanks for joining us. Sunil, let's start by telling our audience what is Abakkus all about and what is Abakkus bringing here in partnership with ICICI Direct through its Masters of the Street edition.
Thank you. I was with Reliance Mutual Fund for a long period of time. I started Abakkus in 2018 along with the core team, and the whole purpose was to have a alpha-focused, boutique, niche professional asset management company. And I think the philosophy which we follow is very simple. We call it the MEETS philosophy, MEETS, which is management, earnings, events and trends, timing and structure. And with a proper 5D process, the whole philosophy of Abakkus is to pick stocks which can, on a fundamental basis, give slightly, higher returns than the market and obviously create alpha. Over the last 2.5 years, we have, crossed 5,000 crores in assets, and we have created a niche for ourselves. I think one thing which I should say is that ICICI Securities has been at the forefront of innovation. And through this Masters of the Universe, program, they are trying to bring, niche asset managers like ourselves and make them more affordable to their client base. And I think this is what Abakkus is all about. We call it the Abakkus Smart. It's going to be a nice curated portfolio, and we can talk in detail. But this is what Abakkus is all about.
Sunil, exactly what I want to ask you next. Talk to me a little bit more about Abakkus Smart Focused Alpha portfolio. What is the thought process behind this? You did say it was up until now only for a very niche audience, and now with the help of ICICI Direct, you are going to be sort of accessible to a lot more investors. Talk about the specific strategy portfolio that you have launched.
So a few things. One is focused alpha strategy is the first portfolio from Abakkus Smart Stable in collaboration with ICICI Securities. I think what we are trying to do is create a portfolio of 20-25 stocks handpicked on a fundamental basis. This is a world of convenience. This is a world of also technology. This product allows investors to have a one-click access to a portfolio which is curated after a lot of due diligence by our team, and it is also a portfolio which is regularly updated. So it's an actively managed portfolio. It's not like an ETF. It's an actively managed portfolio, and the whole attempt is how can we make it more affordable for people who don't have maybe 1-2 crore rupees and who can't go to the AIFs and the PMS to also get the benefit of sort of a smart portfolio.
Well, that's a great thought right there, right? Sunil, what is the strategy of Abakkus? Can you help me understand how the portfolios are constructed? And of course, like you said, they're actively managed, but what's the construct of the portfolio? What sectors are you betting on? What sort of parameters would you be watching out for?
Sure. So one is this is going to be a very diversified portfolio. We expect to have anywhere between 20 to 25 stocks in the portfolio. It will be sector agnostic. And what we try to do is, cap the sector exposure to 25% for any one sector. and cap the holding in any one stock to 5% at the time of investing. So I think it's going to be like a very diversified portfolio. Also, this portfolio is predominantly going to invest in companies which are in the top 250 by market cap. So typically, 80-85% of the portfolio would be comprising of companies which have a market cap of more than 10,000 crores. At the same time, even in these companies, which would be so-called the larger mid caps and large caps, we would try to generate alpha through our stock picking. And obviously, the balance 15-20% would be companies where we believe significant alpha can be made. However, all the companies which find a place in this portfolio have to undergo the strict meets framework parameter, which I mentioned to you earlier, and also our 5D process. And therefore, I would say that not only is it fundamentally curated, it is also, a portfolio which ensures less volatility because of the fact that 80-85% of the portfolio is going to comprise of companies in the top 250 as far as market cap is concerned.
Sunil, a fund manager's style of investing also usually plays quite an important role. Can you take us through what is your style of investing?
So one is, I'm definitely going to oversee this portfolio. I have a colleague of mine, Mr. Rahul Veera, who will also be assisting me in managing the portfolio on a day-to-day basis. So I think, style is sometimes, I would say, not understood properly, or even, it's, I don't know how to put it, but sometimes it's not very clear. So from our perspective, I think we believe that India is here to grow. We do believe that this $2.7 trillion economy is eventually going to be 5 trillion. It might take 6 years, it might take 8 years, depending on how bullish or bearish you are. And that is what we are playing for. So we are looking at companies which will definitely grow, because without growth, there is no return. At the same time, we are not in the camp of buying a company which is priced beyond perfection. So while we would like to have good management, good companies, I think for us, valuation plays a big role. And to that extent, you can say that, growth at an affordable or a reasonable price is what we look at.
Right. Sunil, what type of companies, or rather, how many companies, first you might want to tell me, does your team track on regular basis?
So, fund management is the heart of any asset management company. And I think that is what we focused on right from day one when we set up Abakkus. So as we speak, we have a 12-member team of investment professionals. All of them have dual degrees of at least MBA, CA, CFA, or in engineering. A very highly qualified team. At the same time, we also have a few young chaps because they bring freshness to the whole thought process. Together, this team tracks has an experience of almost 125 to 130 years of tracking Indian companies. And on an average, I think we do around 350 to 400 companies, in-house very, very extensively. Besides, we are fortunate that we have the support of at least 30, 40 sell-side broking outfits. And even if we take 10, 12 analysts in each of these outfits, we have access to almost 400 to 500 sell-side analysts, which also helps.
Right. Sunil, also, what type of companies do you generally filter out or avoid while creating these portfolios, or creating this portfolio to begin with?
So I mentioned to you about the MEETS framework. I'll just spend 2 minutes here. What is this MEETS framework? So M is management. Obviously, we like to invest in good management, but for our style, we are very balance sheet focused, and therefore return on equity and cash flow becomes very important. The E is the earnings part. I mentioned to you earlier that however deep value a company might be, but unless there is profit growth, returns are not made in the equity markets. And therefore, we look at companies where profits can double in 4 to 5 years. The second E, which is events, trends, and disruptions, are very important. We are in a world where the way we study, the way we work, the way we entertain ourselves, the way we shop has completely changed. And therefore, before investing in any company, we definitely analyze what kind of disruptions can hit those companies, and those companies might be out of business because of disruption. T is the timing part. We can't time the market, but there is this mean reversion which we believe in. What we are paying for and what we are getting in return becomes very important for us. And the last bit is the structural bit. Again, we are in a world where new sectors, new companies are coming in. Some companies, some sectors might have growth opportunity from a 4-5 years perspective of 30-40%, and you'll have to pay a premium to it. The next part is what you asked me, which is the filtering part. So we start with around 1,200 companies which are investable. It's a 5D process, and then you just keep on narrowing the funnel based on the detailing, the meeting with the company, our whole discovery process. And then once we have those 50-60 companies shortlisted, then the fund manager picks 20-25 depending on the construct of the portfolio, and which we call the delivering process. So I think it's a very well structured portfolio. I'll just like to highlight one thing here. Equity returns on a portfolio basis are not only about buying the right stocks, but also avoiding wrong stocks. And I think a disciplined approach allows us to do both.
Yeah, I guess risk management is equally important. Sunil, but once you've brought it down to those 20-25 stocks, what happens in a case when a few stocks, become overweight on the portfolio? Do you go out and correct the portfolio to rebalance it in terms of stock holdings, or you just let it go and let it be rather?
No, I think it's a great question. We definitely are, as I said, the portfolio is very actively managed, and on a day-to-day basis, the fund manager and the team would look at it. At the same time, as I said, we invest a maximum of 5% in one company when we start. Okay. The rebalancing happens, but not on a day-to-day basis. You're not going to rebalance if the 5% becomes 6%. Otherwise, you are going to knock off your winners, and that is not how alpha is created. But as I said, if the fundamentals keep on improving, then we have no sort of aims in holding on to the stock. But obviously, if it becomes too high a position, then there is definitely some knocking. So I think at around 7.5-8%, we start to evaluate whether there is a rebalancing needed. Otherwise, we'll let the winners ride.
Right. Also, then generally, how often do you plan to rebalance the portfolio? And does an investor stroke client get a notification when the portfolio is due for rebalancing?
So the good thing is that, technology is at the forefront of this product. And ICICI Securities obviously is the number, in terms of technology adoption. And we are very honored to be partnering with them. So this portfolio is going to be an actively managed portfolio. At the same time, we don't intend to churn it on a day-to-day basis. But we definitely believe that there might be changes at least, once a month, or maybe even earlier if the price moves are very, I would say, in a big band. In terms of technology, the moment we change a portfolio, there's an automatic notification which goes to the investor, and they can rebalance it at the click of a button.
Right. Oh, that's amazing. Thank you so much, Sunil. Always good talking to you.
Thanks a lot, and best wishes, and stay safe.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.